On in the oil market, talk about the 10-year note. We can talk about a Southern California housing example that frankly scares me. I want to know if it's going on around the country. And we could talk about Marc, Ben, and John. Folks, this is the Daily Financial News. Yes, I know I am super casual this morning because I frankly don't feel great. So I didn't have the heart to get all dressed up, so I am wearing my university sweater. Shout out Broncos, Santa Clara University. But we move on, even on the days that you don't feel well. So first, I want to share with you an example that I got from Adrian Hernandez. Adrian Hernandez, if you don't know, is one of the millionaires that come back each week. He supports Orange County as well as the Inland Empire of Southern California. During our discussion yesterday, we went through a real-world example that if is happening around the country scares me. So what is that real-life example? Here you go. Adrian had a property listed on the market for about 40 days. 40 days on market. There was no activity. On Friday, he had a conversation about potentially lowering the price 6 figures. 6 figures. You go through the weekend, you get ready to make the updates Monday afternoon, and lo and behold, from no activity, stale listing, to full price offer not once, not twice, 3 times. He got 3 full price offers. What happened? His marketing didn't change. Listing didn't change. What happened? Rates crashed. On Friday, Jerome Powell came out. The market heard what they wanted to hear. Rates are down 100 basis points. If you have good credit and you pay points, you could get a 30-year mortgage below 6.5, where 2 weeks ago it was over 8. So at least in this one Southern California example, it seems like people are starting early, right? Remember, I've been saying this is going to be a repeat of last year, where Q4 was slow, January was slow, but February picked back up. Perhaps, maybe, we'll see, people have learned their lesson and they're starting early. If you are an investor, and if you are in the market, and you likely are if you watch this channel, understand that if you are watching days on market like me, you need to be aggressive now. Just like last year, if rates fall more, demand will come flying back. It's just where we are, especially if you are below the median. Again, Adrian Hernandez shared some great data on Orange County, and 2x the median, still slow. You can go back and watch the video. I think there was like 2x the median in Orange County is 2 million and above. Days on market, almost 200 days when you put it all together. I am talking about below the median. That is where the supply is most constrained. That is where interest rates matter the most. That is where most buyers are. So, if you are a real estate agent, if you have a listing in your market, I would love to hear, have you seen a change, a pivot in the last 7 to 10 days? Have listings gone from stale to pending? Maybe this is a one-off. Maybe something happened unique with this listing, who knows? But it did remind me of last February. So let me know what you're seeing in your markets. I'd love to see comments below. So what's going on with oil? Oil dropped below 70 bucks a barrel. A couple of things that I'm thinking about when I saw that this morning. One, I hope the president, whoever's doing that, is refilling our strategic petroleum reserves. As you guys remember, we released a lot of oil to combat the $100 oil of last year. I hope they are refilling it with cheaper oil. That would be wonderful, right? Let it out at 100, fill it back up at 70. That is a net positive. The 10-year note, now under 4.15. Tomorrow is a huge day. Huge day. I believe the expectations, now this is from memory, so I could be off. The expectation is for 180,000 jobs created in the month of November. If the job creation number is weak, which would mean 3 for 3 coming in below expectation, because the JOLTS report missed badly, ADP report missed badly. Now, if jobs report badly, we could see that fall even further. Employment is the last domino to fall heading into a recession. So tomorrow's number is important. Don't forget, there will be noise in that number. We had 2 large strikes end, right? There was obviously the ones impacting the auto dealers or the auto manufacturers. There was also the Hollywood strikes that ended. So we could see some distortion in the numbers, but we will need to watch out for that. Tomorrow is a very important day. If we got a blockbuster number, you would see these rates skyrocket again. But we shall see. I think it's 5:30 tomorrow. It might be 6, at least Pacific. So we'll see for that number tomorrow. I got some retirement data today that really is scary. The data that I'm about to share with you is exactly why we started investing 20 years ago. I just wanted 4 rental properties, right? That was my goal, 4 rental properties, because I wanted a better retirement at 65. So, what percent, this is a question for you, feel free to leave a comment below. What percent of retirees have $1 million in their 401k or IRAs or combined? Just 401k, just IRAs. Do you have a guess? At the age of 65, when you retire, what percent have $1 million? The answer? 10%. 10%. 1 in 10 retirees have 7 figures saved in a 401k, IRA, or combined. What is the average? The average retiree has $426,000. What does the median retiree have? Remember, average and median are different. This confuses the crash bros to no end, average and median, but we'll fight that battle another day. The median retiree has $164,000. Folks, the median is the middle. You line up all of them and you pick the person in the middle. Average, you add them all up and you divide by the number. Hence a very, very distorted number. Now for the question in the article that I was after. Because again, remember when I got into real estate, all we wanted was 4. I wanted a better retirement, all of that. What is the average net worth of a retiree? You work 40 hours for 40 years. You pay off your house perhaps. This number includes primary residence. The average net worth is $1.2 million. I don't have the median. They didn't share it in the article, but given the above example, the median would be significantly less than that. I don't know about you, but retiring on $1.2 million, including my home, never sound exciting to me. That's what I looked at real estate investing for. That's why I wanted to get 1 house a year or every 2 years. All I wanted was 4. I knew if I got 4, I spent 30 years paying them off, or my tenants paid them off, that when I got to retirement, I would have something more than $1.2 million. Folks, you don't need 20, you don't need 100, you certainly don't need 1,000 units. Your life changes at 4. If you choose to get to 4 and then you go to 10, great. If you choose to go to 10 and you get 18 like Dion and you're financially free early, great. If you're like Millennial Mike and you got to get to like 22 or 23 and you're financially free, great. You don't need hundreds. Keep your head down. Let your day job be the key to create the disposable income. The disposable income becomes the down payment. No, it has to cash flow day one. Don't gamble on appreciation and negative cash flow. Don't do any of those things. It's a very simple formula that, if followed with rigor, will lead to the promised land. I want to talk about John, Marc, and Ben. Who the heck are John, Marc, and Ben? These three young men are examples of one rental at a time followers who were brave enough to get on the channel and share their stories. All three have been published. I think I have 6 more scheduled. I want to shout out Millennial Mike. Millennial Mike gave me the idea to interview brand new investors to share their story. Really, share the suck. We talk about the first 5 years sucking, and again, we moving forward. So all 3 videos are already on the channel. We will start with John. John was first up. John started investing, actually did something 14 years ago, wasn't serious, started getting his first unit. One of the things you got to realize is life happens. During the discussion with John, he let it be known to the audience that he was recently laid off. He was given a nice severance, so he was contemplating, should he go full-time in real estate? Should he focus on getting a job? My opinion was, again, I'm an employee. Go get a job. And then if you get a job quickly, that severance will be seed capital for the next deal. Not everyone is Jason Pritchard, who could burn the boats and deal with the stress level. I couldn't do it. So again, life happens. Go ahead and watch the video with John. How about Ben? I think Ben was second. Ben, young man in Michigan. I think he's like 22, 23, something like that. House hacking a duplex. He lives for $85 a month. The thing I love about Ben and his wife Josie, if I got that right, is they are living remarkably below their means. Ben drives a truck with 360,000 miles on it. It would be very easy for them to, expand their living, increase their monthly expenses. They're not doing that. In that episode, I told Ben, right, they could be financially free by the time they're 30, maybe even by the time they're 28. It all starts with house hacking. They're working on their next deal, as I recall, seller financing, trying to get it done. It's all out there, folks. It can work. It does work. And then Marc, the financial firefighter, if I remember correctly. He shared a story. He lives in Honolulu. He started investing in Pittsburgh because of a friend. The first couple of worked well, got the idea that some is good, more is better, and went too fast. Marc shared that he got 10 properties, 10 single-family homes in 6 months. I have never done that. I have never bought 10 single-family homes in 6 months. That is a lot in a very small window. We also talked about a syndication that Marc was a part of, and during the video I outlined exactly what I think happened, and we got that one right too. So folks, we got more first-time investors or investors in the first 2 or 3 years coming. If you want to share your story, leave a comment below and we will find a way to make an introduction. I would love to record more of these. Again, doing the work works. Being in this community works. It's just a great place to be. I'm so happy to be a part of it. Talk about Dollar General and then RH. Dollar General reported, Dollar General obviously like the Dollar Tree, the dollar store. They beat top line, beat bottom line, reaffirmed guidance, but did highlight a problem with shrinkage, aka theft. I thought that was interesting. RH reports after hours. If you don't know who RH is, it's Restoration Hardware. Why are they important? They are a high-end store involved in the housing market. I want to see just how bad the high end is. I'm guessing not great. All the activity I'm seeing, like in the Southern California example, are median and below. My guess, we'll see in the numbers, RH is median and above, which still is not great. And then the home builders. Toll Brothers reported this week. Toll Brothers is a luxury home builder. They had great numbers. Why? Because they're building less homes and they're building smaller homes. Folks, new home prices are crashing because they're building smaller homes. The Crash Bros do not understand Economics 101. They just want to scare you. Home builders, Lennar and what was the other one? Pulte, I think? No, Lennar and D.R. Horton hit 52-week highs yesterday. Builders are doing exactly what I called 6 months ago. They're building less, they're building smaller. They're more profitable. Can't make this stuff up. And then finally, folks, time for you to join the virtual event. Yes, the Vegas event is going virtual. We are sold out. All 300 tickets are sold out, sold out, sold out. But you want to be a part of it. We are going to have 15 presentations from people that make one rental at a time go. You are also going to get the video. I am paying somebody to record the 20 hours. It'll probably take 2 or 3 weeks to chop it up so we can load it on Teachable because they have size constraints. But it will be there and you will get it for free. So $99. You will get to watch it at your heart's content that weekend and you will get the replay. You want to buy it, you want to buy it. Space is limited. This will sell out and I can't believe it. We're doing it for only $99. So go get your ticket today. I'll put it in the link below, the description below. It is also in the description for yesterday's daily financial news, or go to Eventbrite, search my name, and you can find it right there. Lastly, Chris and Rachel, congratulations on your next deal. Your card will be going out in the mail. Folks, we send out cards as you close deals, and we send out golden tickets when you close your first deal. All you got to do is let me know your address. You can DM me on Instagram. You can email me off my website. And don't forget that 53-year spreadsheet. If you haven't got it already, it was the key for helping me call the housing market correct the last couple of years. So go get it. You can see what I was seeing. Have an amazing day. I want to once again shout out John, Mark, and Ben. Thank you for coming on the channel. Thank you for sharing your story. You are amazing. Later.